Hi everyone, welcome back to Books and Backbone. My name is Donna. I am the CEO of Bookkeeping Made Simple, your host, and I'm looking forward to talking to you about, we're going deep into cash flow today. So last week I talked about why cash flow and profit are not the same thing. Profitable businesses run out of cash all the time. If you haven't heard that episode yet, go back and listen to it first. It's the setup for today. Today is the tool. Because understanding that cash flow and profit are the same thing, are not the same thing, is one thing. Actually managing your cash flow, having a system, watching the right numbers, seeing problems before they arrive, that's something else entirely. And that's what today is about. How to actually manage cash flow, not in theory, in practice. Before I give you the tool, I want to name why most business owners aren't using it. It's not because they don't care about cash flow. Every business owner I have ever worked with cares profoundly about cash flow, and it's usually because they've been surprised by it at least once, and probably more than once, in a very painful manner. That's why I build the way I do. Nobody wants a surprise in their cash flow. And it's only because they don't have a system. They don't know how to do this. And without a system, cash flow management defaults to basically the same thing almost every time, checking the bank balance and hoping. Hope is not a cash flow strategy. Checking your bank balance tells you one thing: what's in the account right now. It doesn't tell you about what's coming in next week, what's going out the week after, whether the slow month you can feel coming is going to be uncomfortable or genuinely dangerous. The business owner who checks their balance and sees $40,000 might feel fine, and they might be fine. But if $38,000 of that is payroll, rent, insurance, vendor payments, and those are all due in the next 2 weeks, they're not fine. They just don't know it yet. The 13-week cash flow forecast is what replaces the bank balance check with actual visibility. And this is exactly what it sounds like. 13 weeks, which is 3 months. A picture of your cash position week by week over the next quarter. This should be rolling, by the way. On the one side, everything coming in: client payments, deposits, receivables you expect to collect. A receivable in 2026 that was generated in 2024, you're probably not getting paid on anytime soon, so don't count that. Really, if it's over 90 days, I would say that would be nice to have, but don't count on it. Some businesses are just slow to pay, others are pretty quick. But you need to be pretty sure about those cash payments coming in. So any other cash inflows you're expecting. On the other hand, money going out: payroll, rent, loan payments, vendor invoices, credit card payments, tax estimates, subscriptions, everything. The difference between the two, week by week, gives you a running cash balance. And that running balance tells you something that your bank account never can. Not just where you are, but where you're going. Now, I want to address the thing I know you're thinking right now, which is, boy, this sounds like a lot of work. It isn't. The first time you build it takes about an hour if your books are current. After that, updating it's a 20-minute weekly task. The expense side is mostly fixed costs you already know. Rent, you know how much your rent is, you know how much your payroll is, you know how much your loan payments are, you know how much your subscriptions are. Those don't change week to week. The variable side, receivables, project-based income, that's the part that you update as you go. It's not complicated, but it does need to be consistent. So I'll walk you through how to actually set this up. I'm going to keep it simple. You don't need software for this. A spreadsheet will work just fine. Column 1 is the week 1 through 13. Label each one with the dates. So if I was doing it for August, I would say the first week of August is the week of August 3rd. The second week of August is the week of August 10th in 2026. Label each one with the dates. Column 2 is cash coming in for each week. What do you expect to receive? Start with what you know. Confirmed payments from clients, scheduled deposits, the recurring revenue that hits like clockwork. If you have a restaurant, a business such as a restaurant, you pretty much know what your ticket sales are going to be night after night when your slow seasons are, when your busier seasons are. So you can go back to the previous year and have a pretty good estimate of what your sales are going to be, I hope. But you're going to put in what you're fairly confident about, invoices that are outstanding but are probably going to be paid, milestones close to completion, your average ticket sales for the evening, your average sales for the week. Be conservative, by the way. If you're not sure what a client will pay, don't assume the best case. Assume a week later than you expect, at least a week later, maybe 2 weeks later. Cash flow forecasts, by the way, that assume everything goes right aren't forecasts. They're wish lists. We're going to assume that everything is going wrong. Column 3 is the cash going out. For each week, what do you know is leaving? Payroll, rent, loan payments, subscriptions, tax estimates, vendor invoices, and you're going to put all these on their due dates. This side's actually easier than the income side because most of your fixed expenses are predictable. You know when they hit. You know how much they are. The variable expenses, materials, supplies, project-specific costs, you estimate based on what's in the pipeline. Column 4 is the running balance. So starting with your current cash position, add the inflows, subtract the outflows for each week, and the number you're left with at the end of each week is your projected cash balance. The projected balance is what you're managing. Once you have the forecast built, here's what you go looking for. The dip weeks. Every business has them. Weeks where outflows cluster together and inflows haven't quite caught up yet. The third week of January, the week after a quarterly tax payment, the week payroll runs and 3 clients happen to be paying late simultaneously. When you can see the dip coming 3 or 4 weeks out, you have options. When you discover it the day it happens, you don't. Then you're going to look at the trend. Is your cash balance growing week over week, holding steady, or slowly declining? A slowly declining cash balance that looks fine today can look very different in 10 weeks. The forecast shows you the trajectory, not just the snapshot. The single point of failure. Is there one large receivable that your entire cash position depends on for the next 6 weeks? If that client pays late or doesn't pay, what does the forecast look like? Scenario planning in the forecast. What if this payment doesn't come in? Is one of the most valuable things you can do with this tool. And then the buffer. What's the minimum cash balance you need to feel safe to cover 2 weeks of fixed expenses without any income coming in? Whatever that number is, that's your floor. When the forecast shows you approaching the floor, it's time to act. Now, what do you do when you see a problem coming? This is the part that makes the forecast worth building. Seeing the problem is only useful if you do something about it. Here's what the options actually are in the order of preference. 1, accelerate collections first. Before you do anything else, look at your receivables. Who can you call this week to move a payment from next month to this month? A direct personal conversation with the client around an outstanding invoice is the fastest way to improve your cash position, and it costs you nothing but a phone call. Most business owners, by the way, are terrible about their receivables, and I don't understand why, because that's money that should be going into their pockets. They don't like to make those phone calls. They don't like to send the invoices. They don't like to collect on it. And I also recommend that you have a relationship with an attorney or a collections firm so that you can then turn over outstanding receivables and have them factored. Okay. The reason for that, one, for myself, if I do work for a client, number one, I'm not going to do anything that requires an outflow of income, such as filing a tax return until I get paid. But in the occasionally I have had some receivables. I had a client that didn't pay me for several months and then got bent out of shape because I turned him over to collections. But I was like, what do you expect? Just because I'm a small business doesn't mean that my bills are any less important. So I do recommend that you work with a collections company that will take very small clients. And I also recommend that you work on your receivables every week. I remember years ago, I worked for a company that they sold candles. And And I came in, they wanted me to be the collector, which is fine. I was the accounts receivable clerk. And I spent 6 weeks, maybe 3 months, doing nothing but collecting on past due invoices. Within 3 to 6 months, and I think it was 3, I had everything caught up and almost everything was net 30. All it takes is consistent attention. So accelerate your collections first. Develop a collections system. Okay. Second one, hold discretionary expenses. If there's a purchase you were planning to make in the next few weeks that isn't time sensitive, hold it till after the dip. Software upgrades, equipment purchases, marketing investments, these can almost always wait 3 or 4 weeks without consequences. Draw on your credit line before you need it, not when you need it. If you have a business line of credit, and if you don't, establishing one before you need it is one of the most important financial moves a small business can make. Draw on it when the forecast shows a dip coming, not when you're already in it. Lenders look at your financials when you apply for a line of credit. Doing it from a position of strength rather than desperation makes a significant difference in what you're offered. So we all know this. Apply for credit when you don't need it, because they don't want to loan to people who do. Have the conversation with your banker early. If the forecast shows something significant coming, a gap that your normal tools won't cover, talk to your banker now. Not in week 8 when the gap is here, in week 2 when you can see it coming and you have time to present it as a manageable situation rather than an emergency. Now, the forecast only works if you maintain it. Like I said about receivables, this should just be part of your weekly rhythm. Every week, same day if you can, you do your 4 things. Record what actually came in last week versus what you forecasted. That variance is going to tell you how accurate your assumptions are, and over time your forecasting gets more precise. Record what actually went out versus what you forecasted. Same reason. Update the incoming side with new information, new invoices sent, new payments confirmed, new projects that have moved into the pipeline. Look at the next 4 weeks and ask, is there anything I need to do this week based on what I see coming? That's it. 20 minutes. Same day every week. Maybe do it on Sunday night. The business owners I work with who do this consistently tell me the same thing. After about 6 weeks, cash surprises almost disappear, not because the business changed, but because they can see what's coming. Managing cash flow is not complicated. It never has been. It's just a picture of what's coming in, what's going out, and what the balance looks like week by week for the next 3 months. Built once, maintained weekly, every week, reviewed honestly. The businesses that manage cash well are not the ones with the most sophisticated software or the biggest finance teams. They're the ones with a simple system and the discipline to use it. If you want help building your first 13-week forecast, or if you want someone to look at your cash position and tell you what they see, I would love to have that conversation. You can find me at mysimplebookkeeping.com. You can make an appointment at mysimplebookkeeping.com/contact. The first call's free. I'm Donna Harris. This is Books and Backbone. Know what's coming before it gets here.